This article is going to cover how to diversify your cryptocurrency portfolio. Why? Because holding only one type of cryptocurrency is risky and not advisable. However, there are many different cryptos available and you should invest in as many as possible in order to balance out your risk. In this article we will dive into different ways you can diversify your portfolio. Diversification helps reduce the overall risk of a portfolio by spreading investments over a variety of securities with different risk characteristics. It also has the added benefit of allowing you to invest in a wide range of cryptocurrencies that have very different price movements, market capitalizations, use cases, and long-term growth potentials. What is diversification? Diversification is the practice of spreading investments across different asset classes. It allows investors to increase their chances of generating a profit from their investments. When diversifying a portfolio, it is important to invest in assets that have very different risk characteristics. This provides the most protection against potential losses in case one of the investments fails or is overall underperforming. In a diversified portfolio, a certain percentage of the portfolio should be invested in stocks, another percentage in bonds, and the rest in cash or other investments that have low risk and provide a buffer in case one investment goes against you. How to diversify a crypto portfolio. Diversification is a key part of any portfolio. While it won't help you avoid the occasional bear market, diversified portfolios are likely to produce more consistent returns over time. The best way to diversify a crypto portfolio is by investing in as many types of cryptocurrencies as possible. A diverse portfolio is one that contains a wide variety of cryptocurrencies with different use cases and price movement. When you invest in a diverse portfolio, a little bit of each cryptocurrency type is likely to outperform, thus increasing the overall value of your portfolio over time. When building a diversified cryptocurrency portfolio, consider the following factors. Risk. Different cryptocurrencies have very different risk characteristics which can help reduce the overall risk of your portfolio. Return. Different cryptocurrencies are expected to return different amounts, so diversifying across different types of cryptocurrencies will result in an even distribution of returns across all your holdings. Price. Different cryptocurrencies have different market capitalizations which can help reduce risk while maintaining returns over time. Long-term growth potential. Different cryptocurrencies have very different long-term growth potential. This can provide protection against the overall decline in the value of cryptocurrencies as adoption grows over time. Utility. Different cryptocurrencies have very different utility. For example, some cryptocurrencies are meant for payments while others are meant for storage. This can further diversify your portfolio and further reduce risk. Gaming crypto coins. Cryptocurrencies that primarily function as a medium of exchange. Examples include Ethereum, Litecoin, and Bitcoin. These cryptocurrencies can be used to conduct transactions between parties or used to buy or sell products or services. However, they are not designed to store value and are not considered to be a long-term investment. As mediums of exchange, cryptocurrencies are the most popular way to buy other cryptocurrencies. Metaverse crypto coins. These are those cryptocurrencies that are designed to solve real-world problems. For example, there are cryptocurrencies that aim to offer better supply chain management, or those that aim to provide reliable data storage. These coins may have a very high market cap and high price, but they may not have a high rate of adoption yet. There are likely to be significant growth rates in the future, which means they could increase in price significantly over the long term. Decentralized finance coins. These are primarily coins dedicated to financing project development in the blockchain and crypto space. The most popular are Ethereum-based tokens that primarily fund projects to build the Ethereum network. Strategies for diversifying crypto portfolios. When developing a diversified portfolio, it's important to include as many different types of cryptocurrencies as possible. That way you can reduce the overall risk of your portfolio by spreading investments across a wide range of different cryptocurrencies. Here are some ways you can accomplish this. Invest in a diverse portfolio of cryptocurrencies. By investing in a wide variety of cryptocurrencies, you can diversify your portfolio across many different risk characteristics. This can help reduce the overall risk of your portfolio while also providing a large number of opportunities to profit. Invest in cryptocurrencies with low price-to-earnings (P/E) ratios. Cryptocurrencies with a very high P/E ratio are likely to lose value over time. Therefore, it's important to invest in as many cryptocurrencies with low P/E ratios so your overall portfolio value doesn't lose as much value compared to cryptocurrencies with high P/E ratios. Invest in cryptocurrencies with low market capitalization. Low market capitalization cryptocurrencies are less likely to increase in price over time compared to those with a higher market capitalization. This is because they are likely to have a lower total market value, which means their share of the overall value will decrease over time. Invest in cryptocurrencies with high long-term growth potential. Cryptocurrencies with high long-term growth potential are likely to increase in price over time compared to those with low long-term growth potential. This is because they are likely to have a higher rate of adoption and adoption increase over time. Bottom line. Diversifying your portfolio can help reduce the overall risk of investing in cryptocurrencies while also providing a large number of opportunities to profit. Investing in a diverse portfolio of cryptocurrencies with low P/E ratios, low market capitalization, and with high long-term growth potential can help diversify your portfolio and provide protection against the overall decline in the price of cryptocurrencies over time.